Welcome, Mortgage Coach community. We'll give everybody just a few seconds to get joined into the webinar today. All right, we've got quite a few people joining us today. Hi, guys. All right. My name is Suzanne Dunafin. I'm the Director of e-learning here at Mortgage Coach. We're gonna wait to see that attendee list kind of level out. It's still growing. I want everybody to get used to using the chat option in the Zoom, if you would, and tell me where you're calling from. Hi, Gloria. Give me a shout out. All right. Hi, Ron. Hi, Randy. Hi, Mirren. Hi, Katie. Wow. Robert, Texas. What's up? There's so many of you today. I'm so excited. What's up, Tom? Kevin from Vegas. Always a good time. Okay, that attendee list is still climbing, guys. So I'm going to give it another 30 seconds. What's up, Albert? Hi, Nick. All right. This is amazing. Samuel, you're down the street from me, Frisco, Texas. Hop, skip, and a jump. Wow, guys, that list is still, still climbing. I'm actually in McKinney, Texas. Go Cowboys. Patrick, top into you. And we got Jonathan from the ATL. All right. Okay, guys, I think I'm going to go ahead and get started. You guys are ready to rock with this training session. This is the Mortgage Coach strategy training. And a lot of people ask, well, what is a strategy? A strategy is any way you can build a total cost analysis in Mortgage Coach to show different loan options. So whether that's an FHA versus conventional, or a refinance and reinvestment strategies, or rent versus own, or cost of waiting, or there's a really cool appraisal gap strategy. So all these different strategies. I'm going to start us off with a poll, if you guys wouldn't mind. I want to find out a little bit more about my audience. So I am going to send you guys a poll, and I'll give you a few minutes to answer. Here we go. Answer that poll if you would for me. I want to see where you guys are at with your Mortgage Coach knowledge. And I want to see what you guys are looking to learn today. Now, this is a special session today. We're going to showcase some VA options in honor of Veterans Day last week. But I really want to make sure that we're all here and interested in learning about VA options in Mortgage Coach. So y'all go ahead and answer the poll for me. Give you a couple minutes to do that. That helps me out. That helps me know where you are and what you want to know. Okay. There's a lot of you on the call today, so. Hey, Yolanda, thanks for joining. Okay, I got some white belts. Cool. Got some orange belts. All right, you guys are ramping up. Very good. Got a few blue belts, purple belts, got a brown belt. Okay, great. So a lot of you are white belts. Good, you're in the right place. Let's see what you guys are interested in learning more about today. What black belt strategy would you like to learn? So rate term, refinances, purchases. We're going to talk about VA products for sure today. Seller buy down is pretty popular right now as well. So we'll definitely talk about that. It's always a mix. I think everybody wants to learn a little bit of everything. I may have an extra question in there. Y'all can ignore number 3. I don't know how that got duplicated, but don't enter number 3, enter number 2. Okay, good. Yes, the VA product. Okay, I think we are going to start with the VA product. It's so important to help our heroes get into that of their dreams, guys. Okay, great. So I think everybody's answered the poll. Thank you so much for answering the poll for me. I'm going to end that poll. That helps me so much learn where you guys are at. And I know a lot of you are here to learn about the VA product. So we are recording. If you guys are looking for a recording after this, awesome, Erin. Yes. If you guys are looking for the recording, go ahead and email me later on and tell me you need the recording. So I'll remember. I'm going to put my email address in the chat. All right, Gloria, Air Force. My brother was in the Air Force. I love it, guys. I love that you're interacting with me. Here's my email address if you want the recording. Yes. Okay, good deal. Okay, let me move that out of the way. I'm going to actually start with a little PowerPoint, not a large PowerPoint, but I'm going to set the stage with this PowerPoint. So I'm going to go ahead and share my screen with you all. We'll play this little PowerPoint to set the stage. Okay, so welcome, mortgage coaches. We're going to make this as easy as humanly possible for you all, especially the white belts. It takes a while to ramp up. It takes a while to learn. Repetition is key. And this workshop is to build advanced strategies. Okay, so little agenda. We are going to be focusing on VA products today. However, we are still going to cover some refinance strategies, reinvestment strategies for that monthly savings on a refi and the debt consolidation. We're also going to look at some purchase strategies, so rent versus own. This comes into play on VA products as well. It's very important for our service members to understand that it is much more advantageous for them to own a home is to rent. We will cover the appraisal gap. We might have time to get to that move up buyer. Let's take a little snapshot real quick of the refinance. I really love the refinance reinvestment strategies, guys. This is the total cost analysis. Remember, you've got your summary area comparing loan options side by side. Nobody else can do this. This is the best way to do that. That's going to create your competitive advantage over any of your competitors, right? And it's going to increase your lead conversion for sure. Once you get up into the area where you are becoming a black belt or a grandmaster even someday, that means that you're doing a total cost analysis with every single transaction. Okay, it's really important to, I get the chills sometimes, you guys. It's really important to show multiple options to your borrowers, these interactive and visual graphs to your borrowers. It's going to blow their mind. It's going to show them the cost and the savings over time, which a lot of borrowers don't think about. They're just trying to get into that new house and close that loan. So you've got to show them multiple options side by side. No more sending attachments in an email. You're laying it all out together, right? And then the graphs, the 3 graphs on the right-hand side, your monthly payment difference, your savings over short term, and your you can show net worth over the long term, interest and MI paid over the long term, or total principal paid over the long term. But I like this snapshot because it really focuses on taking that savings, putting it into principal reduction for that same payment. That's going to reduce that freedom point. And that freedom point is so important. Everybody needs to be, having that goal of becoming debt free as fast as possible. And when they refi, they don't always want to reset the clock back to 30 years, right? They've worked so hard to get down to that 25-year mark or whatever, 20 years left. If they were to take the monthly savings on a refi and apply it to principal, they could reduce that freedom point even. And let me point out to you what I'm talking about right here with the freedom point on that same payment. Just take that monthly savings if you can and apply it to principal. Okay. On the investment side, you could take that monthly savings and apply it to an investment vehicle with a 5 to 10% rate of return. And then that's why we're showing this net worth. Okay. If you were to invest that monthly savings, it would significantly increase the net worth over time. So those are huge to me. The reinvestment strategy, especially for white belts, it's very scary. It's a very large screen. It's very scary. But that's why we call this the advanced session. So we're going to look at that. The appraisal gap snapshot. So this is a total cost analysis showing the appraisal gap and taking a home that is listed for 475. Maybe the borrower bids above that to 500. I know this is a little small, but we'll to it in a live situation here in a moment. And then the appraisal comes in low. So you can either take care of that appraisal gap with single premium mortgage insurance or borrower paid monthly insurance. The cash to close remains the same. The monthly payment is slightly different, but not by much. So you really can show the borrower different strategies to make that transaction happen, even when the appraisal comes in lower than stated. Okay. So these are just a couple of snapshots. That appraisal gap can be bridged with different mortgage insurance options. Here are some of the different strategies, not all of them, but several of them, right? Pre-approval options, VA loan options, which is what we're going to talk about today, that rate and term, points versus no points. You've got different MI options. The debt consol is a big deal. It's very powerful. You know, your typical FHA versus conventional. A lot of times it's better if the borrower can qualify for a conventional product to go conventional versus VA. Seller buy down is popular now. Rates are going up a little bit. So folks will come in with a pre-approval from a couple months ago. They thought they could get the interest rate a little bit lower, and now the interest rates have gone up a little bit. So the seller buy down analysis is coming into play. VA loan options for sure. We're going to talk about that. In fact, we're going to start with that, you guys. You've got points versus no points comparison, cost of waiting comparison, your rent versus own, your appraisal gap, and some non-QM options. And that's just a few. You know, we've also got ways to show construction loans. So we're going to get out of this PowerPoint and we're going to get into some live demo action here. Okay, and I want to show you guys, first of all, I'm definitely going to answer all the questions at the end of the call. Let me see what we've got going on in here. Okay, so I'm going to give you guys some sample presentations. So you can take those. First of all, you'll be able to see the borrower perspective of a total cost analysis and what that looks like for the borrower. And then I'm also going to show you the originator perspective. So what it's going to look like for you, and you're going to be able to highlight in real time. So a couple things before we get started. On the home page, okay, for Mortgage Coach, you've got a connect option at the top. This is the calendar of events. Okay, this is where you're going to be able to sign up for all of the webinars. We have a webinar, a training webinar every single day of the week, you guys. So especially for you white belts, sign up for every webinar every day for a while if you can. It's really going to help you out. Our YouTube channel, if you haven't already, please subscribe to the YouTube channel. You've got some testimonials in here, some example cost analysis. I like this one a lot. You can go to examples, and our top producers in the country, guys, are sharing their total costs with you. They're even sharing their actual presentation with you. So you'll see a video, you'll see the actual presentation. So connect, and then I'm just going to send you this link, guys, because this is super powerful. So I'll copy that, and I'll put this in the chat. Save it as a favorite, okay? Also, in the resources tab, we have a new on-demand training page. So this guy's from the white belt to the orange belt and so on. Okay, getting started. Several videos just for getting started. Level 2 and level 3 to take you into some of those strategies, some templates, and some different videos there. So those are very helpful for you all. I recommend that you use these, and I'm going to send you this link as well. Save it as a favorite. Oops. All right. And if you guys are new and you have your credentials for your Mortgage Coach platform, go ahead and log in and walk through some of these with me. Okay. Let me get back to where we're going to start here. We're going to start with some VA products, guys. This is an example of Rick Betancourt. He is one of the top producers in the country. He's a VA loan expert. He walks us through this example, this particular example, with 20% down. So this borrower wanted to put 20% down no matter what. This total cost analysis is comparing a VA 30-year with a with a conventional 30-year. With the difference in rate and the fact that there's no MI required on a VA loan, we're looking at a monthly savings difference for the VA. We're also looking at savings over time for the VA, and then that interest in 30 years. So this is a no-brainer, guys, when you look at the over time and how much you're going to spend on a conventional versus an FA or versus a VA. Okay. I'm going to share this with you. I'm also going to share videos from Rick with you. So I'm going to go ahead and share this example. It copies to the clipboard. When I hit share, I don't have to right click. This is a good one. Okay. And ultimately, guys, what we're focusing on is really our heroes, getting our heroes into the dreams. A lot of active veterans receive that basic allowance for housing. And if they live on base, they're sacrificing that housing allowance. So it's actually less expensive for them to own a home than it is for them to rent, and take advantage of the 100% financing on a VA loan product. And when you guys are assisting a veteran, you're actually turning into a benefit administrator. It's so important to be able to understand the VA products, dig into the guidelines, so you're an expert on the VA guidelines, and you're becoming a benefit administrator instead of just that salesperson, okay? You want to make sure that you're helping a hero use the actual benefit of VA. They've earned that in serving our country, right? Freedom's not free. And I'm really trying to get through this without getting emotional, because I do get very emotional about our heroes and about our service members. But when you are helping a veteran get into a home, you are changing their lives. And one of the most important statistics that I want to convey to you guys is that when a veteran does become a homeowner, it actually reduces the PTSD rates, and it reduces the suicide rates. So those rates go way down when they own a home. Our heroes absolutely deserve to own a home. And when you use the total cost analysis to show them the difference in these loan products, right? The difference in the rate, the difference in the monthly savings, or the difference in the cash to close, even with that funding fee, that VA funding fee, they can still make it happen, okay? And the difference is huge in the MI factor. I also want to share with you guys this Veteran Mortgage Advisor website. So again, some of our VA loan experts have created this website to help you guys out. And I'm actually going to show that to you right now. Let me see. This is what it's called, Veteran Mortgage Advisor, and it's educating our lenders to serve and protect our military homeowner, military home ownership. So a lot of lenders just don't understand the VA loan product, and the Veteran Lending Council is here to help you. So you have active knowledge-based learning. This is just about VA, guys. Okay, and so it's very important that you, become that Veteran Mortgage Advisor. So a couple other things I'm going to show you all. Let me close some things here and clean up. This is that example from Rick. You can get to this also from our YouTube channel. And I'm going to close this guy. All right, this is a very important demonstration, because in this, for example, you guys, we are comparing an FHA versus a conventional versus a VA, okay? The rates are obviously different. And let me share this with you guys. I'm going to share this in the chat. Okay. And one of the biggest differences here is obviously the monthly MI. The VA has that fee, but let's take a look at the more info button. Okay. The payment breakdown. You can clearly see the FHA has MI forever. The conventional has MI for a while, right, until the LTV comes down. And then that VA won't have that MI. So that monthly payment is absolutely lower. So that's one of the best differences for that VA program. Let's look at closing cost differences. Okay, the loan amounts are a little bit different. This is 5% down across the board for every product type. And you'll obviously see the upfront MIP for an FHA. You do have that VA funding fee. But it's still going to shake out, guys, to where you're still looking at cash to close that is still around the same FHA. Okay, it's still lower than the conventional. Okay, so that's a big difference. The VA's APR is much lower. Okay, because of that no monthly MI. This is where you're going to be able to see the monthly payment difference. Okay, they're saving $147 plus on that VA product. This is over 48 months. Now you guys can configure this particular short-term analysis graph, but you can clearly see the VA product is saving them money over the short term. Okay. Interest and MI paid, even with the funding fee, the VA is about $7,000 less than these other two products due to the monthly MI. Okay. And the conventional has a slightly higher interest rate. A lot of times VA closing costs are less than other products too. Let me go back to closing costs because this might not be for all lenders, but in this particular example, the fees for the FHA and conventional, they're a little bit higher than the VA. So the VA has a straight up $1,000 admin fee, and the FHA and conventional has an underwriting fee and a processing fee. So that varies based on the lender, but a lot of times the fees are less. Okay. All right. Let me close this more info box. I also want the payment stream differences for the FHA. Okay. So showing the difference for the FHA, that MI factor is always going to be there, and the monthly payment every 12 months. Okay. On the conventional payment stream, okay, it's going to, that MI is going to fall off after a certain LTV, that 78% or 96 months before dropping due to that LTV. And then when you look at the VA payments, okay, there's no MI, so you don't even have to deal with MI. So that's another VA benefit. Let's look at the interest in MI paid over time. The interest in MI paid on the VA significantly less than the other two product types. Okay. And then the title costs, they're in the fee detail. Let's go to the closing cost section. So you've got title, you've got title insurance in here for FHA, maybe the same based on VA for title. Okay. But there's still a huge difference in that VA. That VA is obviously the winner when it comes to comparing the VA 5% down to products, FHA and conventional. Now, did I share this with you all? Let me make sure I shared this with you all. I did. Okay, good. All right, so that's a great example of comparing VA to FHA and conventional. I'm going to also share another one where I'm straight comparing the VA to the FHA. The lowest payment option. Okay, use that 100% financing with the VA. With an FHA, you can get to like a 3.5 down payment. But wait till you guys see this. I'm going to go ahead and share this with you all. And we're going to share. Come in the chat. All right. Now, from this perspective, guys, I'm actually in my demo site. We've created this in my demo site. So I can actually do my MC live, or I can do my highlights, and you guys will see the borrower perspective. Okay. When I highlight, you're going to see the highlights. And on this one, I can actually see how many of you are viewing the presentation with my views count in the top right corner. All right. So let's dig into this. The VA is here. Okay, and you do still have that funding, but it actually absolutely shakes out when you compare it to the MI that's going to be on the FHA. Okay, this is the FHA 3.5% down. So I've got a lower interest rate on my VA. My monthly payment difference is huge. Okay, this is saving the borrower that $400 something on that monthly payment. I want to go ahead and show you too in the more info. Okay, so this is the monthly payment breakdown. No mortgage insurance for the VA. Here's that mortgage insurance for the FHA. Okay, let's look at closing costs. Cash to close looks about the same, guys. Now, I know that we've got that funding fee, and you've got your upfront MIP for the FHA, but it's still shaking out. The fees are typically less for the VA. Okay, so if you were to look at the fee detail on the VA product, okay, typically a lot of times the underwriting fee is waived. Okay, so you've got borrower paid fees here, and you've got that funding fee here. On the FHA, if you go to fee detail, okay, you can see the borrower paid fees, the upfront MIP. Still, you want to make sure that you're showing your borrower over time the savings on a monthly basis, the savings over that short-term analysis. Okay, that interest in MI paid. This is saving them almost $27,000 over 60 months, guys. And finally, the interest in MI paid in 15 years. Okay, look how much extra we're paying, or the borrower will be paying on the FHA product in 15 years. So remember, you can adjust the number of years, you can adjust the number of months for the short term, but it's completely obvious that the VA is the better product for this particular borrower. Okay. All right, so that's your VA comparisons. I had a lot of good examples for that. I'm also going to share some videos from some top producers. So you guys will have these. Take a few moments to watch these videos. They're not very long, but those top producers are really talking to you about how to become a benefit administrator. This dashboard gets in my way. This one is the one by Betancourt. He's just the VA loan expert in the on the East Coast, guys. So in the New England area. I'm going to share this video with you all as well. It just helps you you don't have to go hunt through our YouTube channel for these VA options or. Okay, so there's another in your chat. Check this one out from Rick Betancourt. And if you guys got the marketing email that we sent out, there was a little snippet video from Rick Betancourt. It's really going to help you change your mindset about VA products. I think people are a little, they shy away from the VA products because they're not fully understanding the benefit they can bring to our service members. So really take a look at these videos and really become familiar with the VA product. Also, I happen to have up a funding fee. So you can really Google va.gov and really get these funding fees from the Google page, whatever you can find out there. It's readily available. Okay. All right. So that's my Rick video I want you guys to take a look at. And I'm going to go ahead and shut this. Okay, because I'm going to be working out of, for the remainder of the call, I'm going to be working out of my demo account. I do want to take a look at some refinance strategies. So we're going to switch gears a little bit here. I want to show you that refinance and reinvestment. Okay, so when we're looking at this rate and term refi, and I'm going to go to my presentation to see, okay, let's just do that. That's good. So I'm going to preview. For you guys that are white belts, notice I'm going into my advice engine. I'm clicking on my client record. I can really go to any screen I'd like, and I can preview and highlight to create the presentation, okay? I click OK. All right, this is going to bring up my rate and term refi presentation. I'll share this with you all so you can see it from the borrower's perspective. All right. And then I can see how many views I'm getting to. So how many of you are viewing the presentation. And really what I want to show you guys is a refi, a basic rate and term refi. So you will have, let me clear the highlights out to start. Clear all. Okay, so we've got the current mortgage for the borrower, and they want to get a little bit of a lower interest rate. So we do a 30-year fixed option 1 for them. And with the lower interest rate, they can save about $200 a month. Okay, that is going to set their freedom point back to 30 years. And a lot of people are very sensitive about that. They don't want to go back to that 30-year mark. They're already down 5 or 6 years, and then they don't want to reset the clock, right? So what we're showing them with this strategy is what we call a same payment strategy, where they're taking this savings, they're applying it to principal, and then that's going to reduce that freedom point, guys. That is huge. That's going to take them down. If they can afford to make that same payment, that's why we're calling it same payment. If they can afford to make the same payment, apply the extra to principal, that's going to get them out of debt, out of this particular debt in 22 and something years. Okay. So that is a game changer. I don't want to gloss over that. That is something that gives me chills because a lot of times borrowers don't think that far ahead. And then we want to take another look at taking that savings and applying it to an investment account. Okay, so let's look at that. That's what makes this graph so powerful. If they apply it to an investment account, their net worth in 20 years increases over almost $100,000. Okay, so you'll see savings over time with each option. Okay, and then you'll see monthly payment difference with each option. But this net worth graph is a huge game changer for borrowers who just don't think about the net worth. You know, you guys are asking them what their goals are. This presentation is transparent for them. It gives them the opportunity to make the right choice, make an educated choice, and it opens their eyes to some things that they just haven't thought about. When is my freedom point? Or what is my net worth? I'm getting chills again. You know, depending on what their goals are. How long are they going to be in the home? Do they have children going to college? Or maybe they're going to retire in 10 or so years, things like that. So this is really going to open their eyes up to that. You're painting that picture for them. You're creating the star moment for them. That star moment is something they will always remember. And you guys are building the clients for life. They're always going to come back to you. If they're rate shopping you, ask them for the other lender's presentation, the other lender's day, and I can't provide that with you. I bet they can't provide that for you. All right, so this is a good rate and term refi reinvestment strategy, and I want to show you guys how to tackle this when you're building this in the advice engine. This is a screen that was pretty scary for me in the beginning. So, you know, you're building your client information. This is just the first and last name. Okay, this happens to be marked as a marketing. If it is a particular client, you're going to put their contact information here. The goals page is where you're going to mark it as either a purchase or a refi. Super easy. Assumptions, that property value, okay, and the current mortgage information and the monthly cost information on a refi. Affordability, you could use this for their income or savings account if they have one. You could also use this for some tax benefit information. I'm comfortable discussing that. Let's hop down to the first product option. This is just simply marking it as a refi and reducing the interest rate. I have an option here where they might say, hey, I can get even a lower interest rate somewhere else. So let me see a lower interest rate. They may be able to get a lower interest rate, but they might not realize the amount of fees or points that come with that lower interest rate. Okay. Where we get into the same payment option. And that interest rate is the same as the first option. Get into building an investment option. Now, how do we apply the monthly savings to the either principal reduction or an investment account? And I'm going to show you how to do that. You're going to do that in the analysis page, where you can adjust the number of months for short term, the number of years for long term, and you can change the chart type from total worth to total interest in MI paid or total principal paid. Here's where you're going to build your reinvestment strategy. Okay, the screen is super scary, but I want to make it less scary for you all. I want you to focus on the same payment option, where we're taking our monthly savings, that $240, and we're applying it to principal reduction So you're manually entering the savings into the principal reduction. That is what is taking freedom point down to 22, almost 23 years. Okay, that it's as simple as that. Then if you look at this final option we're calling investment, we're taking this monthly savings, scroll down here just a little bit to the investment area. Okay, investment balance, if you have one to start with, investment rate of return. So you can be, conservative or liberal as you want to. This is where you get the financial advisor involved. Have the borrower get their financial advisor involved. This patient will knock the pants off the financial advisor as well. But decide that rate of return. And then here's that investment payment, that monthly savings you're putting towards an investment. And this is going to show you after 20 years. Now, I have marked this button. This is pay off the mortgage investment. And guess what? That takes the freedom point down to 20 years, which is huge. You don't have to mark this box. Okay. And it'll set it at 30 years. But if I were you, I would mark that box to see applying that investment to mortgage and reducing that freedom point. So the screen is big and scary, but it's really not. Just focus on your reduction payment row or your investment area. Okay, and if they had a savings account and you wanted to just apply it to the savings account, you could do that as well. Okay, so that's the refi reinvest strategy. I do want to go ahead and show you guys the debt consolidation. That is a big one. Let me click back client. I'm going to click on my debt consolidation refinance. Okay, when you're building a debt consolidation, guys, you are building the debts in the goals area. So that's one of the most important screens. You're going to fill out all your information for your client and your contact information, but on the goals, you're going to mark pay off my debts. You're going to hit the debts button. You're going to enter all the debts for the borrower that they want to pay off. Now, if you're importing a file from Encompass, these debts are going to come over. Okay. You choose the type of debt, the creditor name, the remaining balance, the interest rate, the payment type. Is it fixed, minimum, or greater than? Okay. The loan balance minimum percent, for example, then it will show the payment here. Or on this auto loan, it happens to be a fixed 375. Okay, and you can add debt items all day long. You can add the student loan in here. What else? Student loan, revolving, child support, what have you. Okay, so that's that big area for the debt consolidation. Then on the debt consolidation product option, that product details screen at the bottom, you're going to mark has debts, click the debts button. And this is where you'll see the debt items, but this is also where you're going to actually mark them for payoff. Okay, they might not want to pay them all off. They might be getting into an LTV that's a little bit too high. You can do a partial payoff. And this is where you check to mark them financed into the loan amount. Okay, this is also where you can preview what the borrower is going to see in the presentation. Now, let me share this presentation with you all. Let me share it with you all. So I'm going to share the end result with you all for the debt consolidation. Okay, we've got a couple of different options here that we wanted for comparison purposes. Okay, take a look at this presentation with me if you would. I can see how many people are viewing the presentation with the views count in my top left corner. Remember, this is the originator view, and you guys are looking at the borrower presentation. So what we've done is we've taken a current mortgage. Okay, we've added a rate and term option where we didn't pay off the debts. Just a simple rate and term, lower the interest rate. Okay, you're going to see a monthly savings of $129. Now, depending on how long they're going to be in the home, they might need to decide where the break-even point is and if this is actually worth a refinance. Then we're looking at the debt consolidation. Okay, so if they were to take their debts, refinance that all into that new mortgage, they would be actually saving as a whole over $1,000 every month, guys. That is huge. Let's take a look at the consolidation modal. Okay, so this is the debt distribution for all of the debts, the mortgage, all the credit cards, and the auto. See how I hover over each of these items and my pie chart over here is accuracy. I can also hover over my pie chart and that's going to update as well. Okay, so that's my total. You'll see the current loan situation if they were to do nothing, okay, their freedom point and the total interest paid. If they're to refinance with that debt consolidation, yes, they're back to 30 years, but their total interest paid is much, much less, guys. They're saving almost $25,000, okay? Now, this is today's monthly payment. This is the proposed monthly payment. You'll also see in this modal short-term scenario and long-term scenario figures. Now, I want you to understand that these figures are 34 months out. Okay, so that's why they're not going to match this. There's a lot of confusion with the proposed monthly payment doesn't match what's on my short-term scenario. That's because this is out in the future. Okay, now remember, short-term scenario, and then you have two columns. You've got the current. If you do nothing, if the borrower does nothing, this is what it's going to look like after 34 months, right? They may have paid something off, but they may not have paid off a whole lot. If they are to refinance with that debt consolidation, this is what it looks like after 4 months. All of this high interest debt is paid off and they're saving an enormous amount of interest, okay? Same thing with long-term. If you hit your long-term tab, okay, this is the current overview. If they were to do nothing, they're still paying on all this, you guys. That's ridiculous. This is a payment overview. Should they refinance with that debt consolidation? Okay, they've still got that mortgage, paid everything else off. Long-term interest on all debts, you guys, significantly lower. Let's click out of this. Let's look at the net worth. Okay, we're looking at quite a bit in net worth. And what this fourth column is showing, this 18-month plan, let me talk a little bit about this. This 18-month plan says, take the savings and apply it to that principal for about 17 months, okay? And then let's see what that's save you this much, okay? You've got your 18-month plan monthly payment difference and your 18-month plan net worth. That's why it says custom, because you're applying this extra to principal reduction for just a short time. And look at your freedom point, okay? Much less, or back to where at least where you were to begin with, okay? Okay, now let's look at the investment. What if you take that savings and apply it into an investment account? Wowza. That net worth in almost 30 years is almost $2 million, guys. That is huge. And again, this is going to be the game changer for you all. This is your competitive advantage. A lot of borrowers don't think about the future like this. And then if you're to invest and pay off the mortgage with the investment, look at the freedom point. Oh my gosh. That is incredible. Why wouldn't they, right? If they can qualify for that debt consolidation of refinance, that's amazing, you guys, to be able to pay off the mortgage in 12 something years. I absolutely get chills with this. Okay, debt consolidation is huge. We're very excited. This functionality has been out for about a year, but it clearly lays out the details of our work. All right, let me close debt consolidation. We've got about 15 minutes. All right, I'm going to go back to, all right, to purchase. Okay, let's quickly talk about a rent versus own. So very important. Okay, a couple of the top talking points when it comes to rent versus own. Net worth over time. Okay, people don't realize that when they're renting, move this whole dashboard out of my way. When they're renting, obviously they're just paying someone else, right? They don't know that when they purchase a home, they're actually investing in themselves. So we've got examples on this rent versus own for a 5% down payment, 10% down payment, or 20% down payment. So the main points, tax benefit, if you feel comfortable. Let me clear all these highlights. If you're comfortable talking about the tax benefit, you can put that in the affordability screen in Mortgage Coach, and the standard deductions are there. The tax brackets are there if you need help finding the tax bracket. If you don't feel comfortable about the tax benefit, that's fine. Just leave those fields blank, and then this won't even show up on your presentation. Okay. Another very important talking point is that net worth. They don't understand a lot of times that when they're paying that mortgage payment, at first they're paying a lot of interest versus principal. Later on, that flips and they're paying principal, and that's like a forced savings account. Okay, it's like they're paying themselves. They can use that equity later for a cash out or when they sell their home. So that's why this graph is super important too. If you're renting, you're paying someone else this amount of money. That's really pretty sickening, if you ask me. If a 5% down payment, you're making principal is going to be this much. Okay, 10% with a 20%. This is how much principal you're going to be paying in. Look at the net worth in 8 years, guys. And again, you can adjust the length, but when you're renting, your net worth is, and look at your net worth when you purchase that home, making that investment in yourself. Now, what I like about this is the 5% actually shows more net worth, and that's just they didn't liquidate their entire savings account for the mortgage down payment. Okay, they just put 5% down. They're keeping a lot of that in their savings, and they have those assets to build that net over time. All right, so rent versus own is super important. In fact, I've got some other examples to show you guys on versus own. Okay, and then we've got 2 more that I really want to cover, but I want to share these with you guys. Donahue does a great rent versus own. I'm going to put that in the chat. Kevin Watson does a great rent versus own, first time home buyer. And all the scripting is in here for you guys, videos. Okay. All right. If you're going to build a rent versus own, you are going to make sure that on the client page, on the client record, that rent versus own is switched to yes. Okay. Then it's going to ask for the rental information in the assumptions area. Okay. All right. So that's your rent versus own. I do want to talk about the appraisal, but before I do that, I want to talk to you guys about a strategy we're calling winning offer. Now, borrowers are going out in the market that we're in today, and they are making offers, and they're getting a lot of rejections. And so they might end up throwing their hands up and saying, I'm just going to wait. Like, it's very emotional to be making homes and you keep getting rejected. So this particular strategy is going to show them how to actually, well, it's going to show them what they can do if they were to bid above the list price. Okay. So they want to put 20% down. They want to avoid mortgage insurance, and they're just not aware of the different types of mortgage insurance that might help them win the offer or submit a winning offer. Okay. I'm going to share this with you guys. So this is actually preparing the borrower and the vision to go out and submit a winning offer. Okay. Let's say that the home that they are looking at is $475, and they might need to bid 25 over, or 50 grand over, or 75 grand over the list price to win that deal, right? This helps them and paints a picture for them, see what they will be able to do without just going and getting into a bidding war willy-nilly without even knowing. This is a little personal for me too, because I'm like, how much over the list price do I need to submit an offer for to win the deal? Had no idea, right? This is going to give them the strategy to know what the potential is if they bid over price. Now, I want to show you too, the cash to close is a little bit higher. The monthly payment is a little bit higher, but at least you're preparing them to know what they have the ability to do. It helps the realtor know too, right? That the borrower's not just going out, throwing out offers when they haven't really looked at the numbers and prepared to be able to fulfill that particular offer. So I want you guys to take a look at the more info. Okay, the closing cost. So on this particular 50 grand over, we're looking at those different MI options for a conventional product. Okay, and that's the difference. Single premium MI, maybe it's not much more that they have to bring to the table, or they're able to finance it in, but at least you're preparing the buyer of the vision of what's possible. Now, let's say that they got their offer accepted. That's going to take me back to the appraisal gap strategy, because that's going to be the curveball, right? They got their offer accepted. They are so excited. They're going to get that home of their dreams. And then let me share this with you all. Lots of links. Guys, save these as your favorites. You can get a lot of takeaways. All right. So that home of their dreams, 20% down, they bid $500,000 to win the deal. The interest rates are the same on all these options, guys. But you're also going to be real interested in the cash to close, the monthly payment, right? Those important things. If the appraisal comes in low, there's a $50,000 gap. Okay, you make up the difference. A lot of people call this the gap insurance. So with single premium MI, you can bring in the same amount of cash to close, guys. Let's take a look at the more info. Okay, with the appraisal gap here, we're 50 grand less. This is single premium MI. So with the closing costs, there's that single premium MI. The down payment is 50. They're bringing in another 50 for that gap, but they don't know that. They still are bringing $100,000 cash to close. Well-qualified borrower. Okay, that's your single premium MI. This is with borrower paid monthly MI. So they're still bringing in 50 down payment, 50 grand to bridge the gap, but they're still bringing in the same amount cash to close. Okay, and let's look at that paid monthly in the payment breakdown. That's that extra almost $100. Okay, so it ups their monthly payment just a little bit. Should still be able to swing. So that's bridging the appraisal gap, guys. And it lets the borrower and realtor know that they're going to be able to complete the transaction. Okay, so make use of those different mortgage insurance options. All right, so we've got about 7 minutes left. Let's see. Let's do a cost of waiting. Let's look at a cost of waiting to round this out. And we're going to pick this guy. And I'm going to share this presentation with you all. Okay. Cost of waiting. So again, if they're getting frustrated and they're just saying, I'm just going to wait. I think the prices of the homes are going to go down soon, and I'm just going to wait. Here is another link I'm sharing with you all in the chat. Okay. So the picture that you're painting for them is, this is if they buy now. Okay, the home that they are looking at, purchase price is $400,000 and interest rates 3.25. They say, okay, I'm thinking I'm going to wait and I'm going to see if the prices drop. Let's say the prices drop $1,000 on that home, but let's say the interest rates go up. Okay, what does that look like? Well, ultimately, guys, that's a difference of $3. Is that going to make a difference to you? What if prices drop, interest rates go up? Let's look at another example of, what if the price goes up on the home? And what if the interest rates stay the same? Okay, you're looking at about another $100 a month in your payment. Worst case, what if home prices go up and rates go up? Then you're looking at another $200 a month in your monthly payment. So you're not saying this is what's going to happen, you're giving them multiple options in case these things do happen. And what does that look like? And then is it worth it to wait, right? So that gives them a really good idea of what could happen in the future and what this looks like for them. And is it going to be beneficial for them to wait? And you're showing them all these different type scenarios. Okay. That's that cost of wait. And I sent you guys the link for that. Okay, good deal. I want to actually send another poll over to round out this call. We are right at about 5 minutes till. There's another poll I want to share with you guys about let's see. Let's end this poll. There should be 2 polls. Oh, here we go. Okay, I'm going to launch this other poll, guys, and I want some feedback from you all about how this session actually went. I want to make sure that you guys got some incredible value from this session. So I'm going to launch this poll, and just to help me out, I love any and all feedback. I'm always up for improvement, okay? And I'll definitely share my email again with you guys. If you want a recording sent to you, I will share this email. Always welcoming feedback and looking for ways to improve the sessions. Okay, so I really appreciate you guys joining today. I really appreciate you interacting with me and sharing and answering the polls. I hope that all of those shared with you are going to be very helpful. Make sure to subscribe to our YouTube channel. And all right, I love this. I love this feedback, guys. Thank you so much. All right, guys, I'm going to let you get back to the rest of your day. And maybe again next week, every Wednesday, same bat time, same bat channel. Y'all have a wonderful Wednesday and a wonderful rest of your week. Talk to you soon. Bye-bye.